basically I'm going to share with you today is a very easy, well, I call it an easy swing trading technique. I only use 3 indicators for this. I use an EMA, it's not an indicator, but basically it's a level. Okay, I use a SAR indicator and I use the ADX indicator. Before I go on to my charts on liquid, just tell you a bit more on the background of these indicators. So EMA, basically exponential moving average. What we want to find is the golden cross. Golden cross, where there's a cross between 2 moving averages. Okay, most of the time we use the 50 and 200-day moving averages. Okay, we might use lower one. Later I'm going to use a lower one as well, 8-15-day. So when there's a bullish golden cross, when the faster ones or the lower period one breaks above the slower MA, which is the higher period MA, is a bull signal. I can enter the trade. And then inversely, of course, I can actually short, I can go in a short direction, right? If the 50 breaks below the 200. The death cross, which means a bearish golden cross. So one is looking at crossovers, and I also want to identify the trend direction using this. So take for example like this, that's what I showed you earlier. This is back in the last year, late last year, from August all the way to December. So what happens during then? The 50 EMA, the red one, is above the 100, it's above the 200 day. So it's clearly a bullish dominant trend. If you look at our S&P, our stock market, in fact the whole 1 year is also the same thing. It lines up the same way. It's a bullish dominant trend. But what happened after around March period? There's a bearish EMA cross. What happens? The 50-day actually crossed below the 100-day. This is a telltale sign that, well, more downside to go. This is the time to get out. It's the last call to get out, because any signs of resurrection of Bitcoin is just a bounce only. It's just a bounce. It bounced on 100 EMA, goes down again. Bounce on 100, okay, here's 200 EMA, goes down. These are key areas. So every time when it touches the key EMAs, I will either take profit, I'll wait for confirmation before I enter the trade. So these are very important indicators. So now we are in clearly a bearish dominant trend. Unless you're looking at trading, day trading. You're looking at, I'm using daily chart here, more for swing traders. Okay, so clearly over here, you have higher odds of winning if you are shorting. You can use a margin short function on liquid. The second indicator I'm going to use is the SAR indicator. Basically SAR, which stands for stop and reverse. Later I'll show you what's this. If the dots is above the price, trend is down. If the dots are below the price, trend is up. This is a snapshot from liquid. So basically imagine here, just using the SAR. Okay? How to know whether there's a continuation up? The dots are below the chart, the candlesticks, higher chance that it will go up further until, you see, when the dots reverse, it's time to go short. You can do a margin short. You can do a margin long, dots reverse again, margin short. Long, short, long, short. How to lose money? Lose money because you don't know what to do, right? So you can't just depend on one indicator. You need to understand all the indicators need to line up. Find confluence, which means multiple confirmation using different indicators. Right? So the last one I'm going to talk about is the ADX indicator. Wow, what's this all about? Several people use this. Average directional index. This is actually designed for commodities trading. Right? It's not for crypto. But a lot of crypto traders anyway, they're from the forex world. They're from the commodities world. And we use our own principles to bring to crypto. Very simple principle. Okay, if the green line crossover pattern, crossover the red line, time to long. If the red line cross over the green, time to short. That's about it. The key level is 25.